got a bit of being a little torn here. Markets probably bottomed thanks to the extraordinary efforts of Congress, Federal Reserve, Treasury. I doubt we'll revisit the lows from a few weeks ago. But I also suspect Wall Street's being a little cavalier about all the damage caused by the pandemic, particularly today. I don't think we're going to be able to turn the economy back with push of a button. If you think we can go back to business as usual next month, I think you're fooling yourself. As anyone who listened to the Wells Fargo or JP Morgan conference calls can tell you, I thought they were muted. Put it all together. I think you need to own some stocks here, but you also got to be careful at this point on what you own after this big rally, which is why I increasingly favor picking individual stocks rather than just throwing money in an index fund, because the difference between the good and the bad is so stark. You don't want anything that's getting blasted by this lockdown. You want stocks that are basically recession-proof. Other than some obvious tech winners, those are what's doing best. That's why tonight we're going off the charts with Bob Lang. He's the founder of ExplosiveOptions.net, as well as being the brilliant technician in the all-star duo behind TheStreet.com's Trifecta Stocks newsletter and the author of Know Your Options, to take a closer look at the defense contractors. That's right. The defense industry is relatively immune to the vicissitudes of the economy. These companies are levered to government spending, and neither party wants to propose cuts to the Pentagon budget during an election year. No way. Meanwhile, we've seen a lot of consolidation. Raytheon just joined forces with United Technologies last week. I haven't talked about that enough. It's really important. Historically, these deals tend to be great for earnings. So let me walk you through some of the largest players in this industry, starting with the daily chart of the new and improved Raytheon, which now includes the core aerospace and defense business from the old United Technologies. That's Pratt & Whitney. We love that. The combined company is a powerhouse. What about the stock, though? When the market was rolling over, this thing lost 55% of its value. This was one of the worst performing stocks in the market. It was a matter of weeks. I don't think people understood what it was. Since the lows in mid to late March, though, Raytheon's erased about half of those losses. Meanwhile, the 20-day moving average is turning up. All right, so here we're looking at the green line. You can see that's turning up. Line points out that we've seen some very strong volume in the past few days. That's good. To him, that means big institutional money managers are buying this thing hand over fist. We're also seeing the same thing in what we call the CMF, or the Chaikin money flow. Look at this. Measures buying and selling pressure. It's been extremely bullish after really being not so good. Boom. I like that a lot. Best of all, look at the moving average convergence divergence, or MACD line. It's an important momentum indicator. And the technicians use to spot changes in the stock's trajectory before they happen. We've used it a lot on the show. At the end of March, Raytheon's MACD made a bullish crossover right there, where the black line goes above the red one. That was your signal. And this is one of the most reliably positive patterns in the book. Put it all together, and Lang could see this stock surging to $80, okay, before it runs into any resistance, which is really, you get about a 20% gain here. Wow. And that's why Raytheon is his favorite name in the group. And I've got to tell you, when I saw this, I'm really angry at myself that I did not do the separate, the Otis, which I like, by the way, because of China and because of this one. This is a very, very powerful chart. Let's go look at the one that's been my favorite. Let's take a look at L3 Harris. Like Raytheon, L3, long my favorite in the group, has had a nice run off its lows. So you're not catching it at the bottom. That's very true. Stock's been butting up against the ceiling of resistance at 192. All right. But today it broke out to 107. I'm sorry, to 207. Broke out to 197, my bad. And what you need to see here is that this is a definitive breakout through all these different levels. That's very, very powerful. It's a perfect buy trigger to Lang. The relative strength index is showing healthy momentum. The 20-day moving average has started curving up, giving you a nice floor of support. So that's underneath the level. That's good. You want that. L3 Harris does have another ceiling resistance at the 200-day moving average, your red line. But I got to tell you something. That's around 201. I think given how easily it blew over this ceiling, you're going to see that one taken out. That's not a hard hurdle. Lang thinks you can buy some right here, and then you buy some more if it goes down to 185. Remember, that's unusual for a technician. Typically, they would jump ship it as it went down. No, not this one. This is a very strong chart. L3 and Harris together, really well run. Next up is Lockheed. These are both mergers, Raytheon and this one. Next up is Lockheed Martin. Now, we're seeing a similar trajectory here. The stock got hammered during the meltdown, then started rebounding dramatically. Last week, though, it smashed headfirst into the 200-day moving average, and then it pulled back. But after taking a few days to regroup, Lockheed surged up to 380 today. Well, broke through that resistance, huh? Meanwhile, the MACD made a bullish crossover. Once again, remember how important those are? Right there. Okay. Reliable. Relative strength index showing some strong momentum. See that breakout there? All right. That's still not in really overbought territory. The market itself is really overbought, the entire S&P. Money flow stayed positive. All right. So we like to look at all these. Chaikin money flow. Nice. All right. RSI, nice. This has got everything going for it. Lang recommends buying Lockheed Martin on a pullback to 355 to 360 area. But after today's breakout, I don't know if you're going to get that. I've always liked Lockheed Martin, but it doesn't have the growth that L3 Harris does, and it doesn't have the unseasoned, but I like togetherness of Raytheon. Finally, there's the chart of Northrop Grumman. This is my least favorite. It's a major defense contractor, didn't get hit as hard as the others when the market started rolling over. Now that it's rebounding, the stocks erased the bulk of those losses. Northrop Grumman is currently down less than 10% from its all-time highs. That's too tight for me. I don't want that. I want ones that are down a lot. The chart shows some surprising signs of resilience. Now, you got to take a look at this check in money flow. See, it's just been green the whole time. Important measure of buying and selling pressure. Even when the whole market was getting crushed, it barely dipped into the red for Northrop Grumman. Now it's very strong. RSI, right? Good momentum index. Looking good. A series of higher highs and higher lows. Best of all, Northrop Grumman has been brushing up against resistance at its 200-day moving average around 348. Today it broke out above those levels. After this move, Lang predicts smooth sailing. Stock climbs to a new all-time high. Bottom line, in a tough economy, the defense contractors make a ton of sense here, and the charts interpreted by Bob Lang suggest that Raytheon, L3 Harris, Lockheed Martin, and Northrop Grumman could all have substantially more upside going forward. My favorites are Raytheon and L3 Harris. Those are the two I'd buy. Georgie in Pennsylvania. Georgie.
Boyer from Pittsburgh, Jim.
Hey, what's up?
Well, I have a question for you.
Mm-hmm.
I just retired in January at age 73, and thankfully have a considerable portfolio of value dividend-paying stocks.
Excellent.
Thank you. My question is on General Electric, which I bought for my grandchildren's custodial account some time ago, around $13. I'd like to know your thoughts on my also investing in GE at the current low rate for my portfolio to expect a return within the next 5 years or so.
Okay, 5 years, and then we're okay, Georgie. There was a very negative piece put out this morning by J.P. Morgan. Steve Tusa really calling one of the most overvalued names in the entire market. It was very daunting, but I think if you take that long-term review, you're going to be fine. Let's go to Dwight in Texas. Dwight.
Booyah. How you, Jim?
Doing good. How about you?
Dwight Morris, Houston, Texas. I'm good. H-Town. First-time investor, first-time caller, new to the game.
Excellent.
With the coronavirus going on, everybody's taking a hit. But I'm feeling really, really good deep down inside with 5G. What's your opinion and advice on Marvell, ticker symbol MRVL?
Marvell is the #1 5G name. That's why my Channel Trust has a huge position in it. I'm going to talk about that on my conference call for ActionAlersPlus.com, which is my club call. I think this stock is showing us, Dwight, that it has 5G all over it. Look at that chart, too. It's just fantastic. Defense contractors make sense here. The chart suggests that they have more room to run, and boy, do I ever agree. Remember, I like the L3 Harris, and then I like the Raytheon. Much more Mad Money ahead, including my exclusive with the CEO of BioReference Labs as the company ramps up its coronavirus testing capacity. Wait to hear about the serology. Then, what will it take to reopen the country? I'll give you my take, and all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.